Welcome back to the Advocate Insurance Desk. I'm Katie Dowson.
And I'm Grace Schmidt.
So, last week we went to California. We walked through the full flow through sequence of the LA wildfires on property insurance pricing using the Advocate Market Terminal. If you haven't listened to that one yet, I think you should definitely go back. It was a really good one.
It was definitely one of our best episodes yet.
Mhm.
But this week we're doing something a little different. Instead of looking at a specific event, we're zooming out, way out,
Yes, like 1800s out.
like going back in time. And we're going to talk about why the Advocate Market Terminal exists, what problem it actually solves. And to do that, we're going to tell a story that starts not in insurance, but in the commodities market.
So, Grace, let me set the stage. Right now, there are roughly 30 million commercial insurance transactions that happen every year, and every single one of them is basically treated as a unique one off deal. So, every policy is a bilateral contract between the insured and the insurer. That means hundreds of coverage terms, dozens of exposure variables, and there's no standardized way to compare one to another. So what does that actually mean for the people in the market, for brokers, for property owners? What should they know?
Right. It means that there's no reference price. So if you're a property owner renewing your policy, you have almost no way of knowing whether what you're being quoted is in line with the broader market, or if you're paying two, three, even four times what a comparable asset is paying somewhere else.
And that's not hypothetical. We actually see 300 to 400% pricing dispersion between comparable risks in the advocate data.
Which is wild. And the reason that exists is because there's never been a data standard for insurance the way there has been for other financial markets.
So, no universal benchmarks, no transparent market pricing, no Bloomberg for insurance, just a massive fragmented market where everyone's kind of operating in the dark.
Precisely. And that very problem is what Advocate was founded to solve. So, to understand what Advocate is building, I actually think the best analogy isn't from insurance or even from modern finance. It's from the 1800s commodity market.
Okay, take me back. What was happening?
Okay, so picture this. Let's go back in time. It's the mid 1800s. You're a wheat farmer in rural Illinois. Okay.
Okay.
You bring your crop to market, but here's the problem. There's no standard definition of what your wheat actually is or what it's actually worth. Is it high grade wheat, low grade wheat? Is it the same quality of wheat coming from Kentucky or Ohio? Nobody knows because there's no common language to describe it.
I think I know where you're going here, Grace, but it seems like basically every transaction was just done based on your trust with that seller. So every transaction is done in the dark. There was no universal pricing language.
Exactly, Katie. And because of that, there was a massive price arbitrage throughout the market.
And Grace, for our listeners who maybe aren't as familiar with the term, can you break down what arbitrage means in this context?
Of course. So, arbitrage at its core is when the same product is being sold at very different prices in different places. So, in a transparent market, however, arbitrage gets squeezed out quickly because everyone can see what the fair price is. Because when there's no transparency, there's no reference price. Those gaps can be enormous, and that can persist for a really, really long time.
So in the 1800 grains market, you could have wheat selling for one price in Chicago and a completely different price 100 miles away or even one town away, and nobody would really know
And
for
that's
sure.
that's arbitrage. And it wasn't a small thing that we're talking about. We're talking about situations where a farmer outside of a major city hub like Chicago might be getting a fraction of what his or her wheat is actually worth simply because there was no reference point, no reference price, no way to know what wheat was actually trading for in Chicago.
So that lack of transparency was not just a problem for the buyer, but also a problem for the seller. I mean, the seller now doesn't know how to price their wheat in the broader market, and then the buyer doesn't know what a reasonable price for wheat actually is.
And it got really, really extreme, Katie. Farm prices in the mid 1800s were ruled by these violent boom and bust cycles. So you had this completely chaotic system where nobody, not the farmer, not the buyer, and honestly, not even the merchant, had any reliable sense of what anything was actually worth at any given time. The market was ruled by information asymmetry.
And if you were a rural farmer far from a city center, you were basically at the mercy of whatever the local buyer told you your crop was worth.
You were at their mercy completely.
The absence of a common standard wasn't just inefficient. It created an opaque market where only a few benefited. And that was the world before standardization.
So on April 3rd, 1848, a group of 82 Chicago businessmen formed the Chicago Board of Trade. And what they did next changed everything. The newly formed Chicago Board of Trade started standardizing. They standardized bushel sizes. They established ways of identifying different grades of grain. And by 1856, the board formally instituted a grading system: number one wheat, number two wheat, number three wheat, with defined criteria for each grade. And by 1859, the Chicago Board of Trade was given the legal authority to enforce these grading standards.
So enforceable and binding.
Yes, correct. And here's the key insight. Once you could say this number two wheat is guaranteed to be the same quality as any other number two wheat, the grain became fungible. It didn't matter if it came from farmer A in downstate Illinois or farmer B in Indiana. A bushel of number two spring wheat was a bushel of number two spring wheat, period.
So you could classify it into standardized groupings.
Yep.
You could finally start to aggregate pricing. You could put a market price on it.
Exactly. And from there, the whole market transformed in stages. First, you had transparent spot pricing. What's a bushel of this grade of wheat worth today? But then you got forward contracts, contracts where a farmer could set a price at planting time and guarantee that price when the crop was delivered later at harvest. And the first recorded one of those was in 1851, just 3 years after the board was founded. And by 1865, the Chicago Board of Trade formalized those into the first standardized futures contracts in the United States.
So you're going from a broken system, a broken market, to a fully functioning futures market in less than 20 years.
Less than 20 years. And then futures enables hedging, which then enabled better financing, which then enabled larger scale trade, which eventually led to options, derivatives, quite literally the entire modern commodities ecosystem. And all of it traces back to one fundamental move:
Standardization.
standardization. And I think there's actually one more part of this story that really matters for what we're talking about today.
Go ahead.
Okay. So there's this narrative. You hear it a lot today with AI and technology that when you bring efficiency and transparency to a market, you eliminate the people in it. But the commodities market tells us the exact opposite story. If you actually look at the numbers of commodities professionals today versus the 1850s, there are dramatically more today. The market didn't shrink, it exploded. Standardization created an entire professional ecosystem: traders, analysts, risk managers, brokers, compliance officers. Those roles simply couldn't have existed before because the market was too opaque and too chaotic to support sophisticated work.
So the tools didn't replace the professionals, they actually empowered them. They gave people better information, better infrastructure, and better data to do more complex, valuable work. Sound familiar? That's what standardization actually does. It raises the floor for everyone. We saw it 180 years ago and we're seeing it again today. I think everyone can see where this is going.
Yes, so let's come back to the modern day, back to the 21st century. So if you think about commercial insurance today, it actually looks a lot like the commodities market before standardization. You have millions of transactions happening every year. Everyone is treated as unique. There's no common taxonomy, no reference pricing. And because of that, there's enormous pricing dispersion, those 300 to 400% differences that Katie mentioned earlier.
And what Advocate is doing is essentially what the Chicago Board of Trade did for wheat.
Exactly. Advocate comes in and says, out of these 30 million transactions, these 1 million can actually be considered comparable. These 500,000 over here can be grouped together.
That's what we call a peer group in the market terminal.
Advocate is creating the standardization layer, the common language, which allows us to measure, compare, and benchmark commercial insurance pricing for the first time.
So, standardization this, standardization that. Standardization is clearly our word of the day, Grace. What does that standardization actually look like in terms of the market terminal for context here?
For sure, Katie. So, standardization in terms of the market terminal basically means that every policy can be broken down into three standardized data sets. First, it's the exposure data set: what is being insured and what's its risk attributes. Second data set is coverage: what's the policy coverage? How's it structured? And third is price: how is premium allocated and how is premium calculated?
And once you standardize those three things across transactions,
Insurance becomes measurable.
and once it's measurable, it's benchmarkable. And then once it's benchmarkable, you can reach or you can build a real market intelligence layer on top of it, which is what we have come to call the Advocate Market Terminal.
Which is the Advocate Market Terminal.
So let's talk about what this looks like in practice because last week we showed this measurable and markable insurance data when we were on the terminal looking at California property pricing in regards to a specific cat event. And we could see exactly when prices moved after the wildfire, by how much, and then when they stabilized, and the different indicators that impacted said pricing.
Right. And that's only possible because of the standardization work that's been done underneath. Without a consistent taxonomy across transactions, you can't build a meaningful index. You can't track pricing trends over time, and you can't compare carrier performance or regional differences.
So the terminal is really the intelligence layer that sits on top of the data standard.
Yes, Advocate takes insurance pricing data, structures it, and standardizes it. And this enables things that just weren't possible before: price transparency through benchmarking, carrier and brokerage performance comparisons, regional and asset level trend analysis, all powered by real, cleaned transaction level data.
And I think what's important here, and to connect it back to the commodity story, this isn't about replacing brokers or replacing the expertise in the market.
No, not at all, not at all. It's all about putting better tools in the hands of the professional class. When the commodities market got standardization and transparency, it didn't shrink the industry. It grew the industry. It created more opportunities for more sophisticated work, and that's exactly what we want to see happening here today with insurance.
Yes. So, a broker with terminal access is actually more valuable now because they can show a client where their pricing sits relative to the market and to their peers. And as consumer behavior data shows, a broker's client or any person looking to buy or purchase something expensive will buy more confidently when they have clarity and when they have access to more information.
Right, exactly. And a property owner going into renewal isn't going to have to guess anymore. They will now have context. They will have a reference point, just like the farmer in Illinois who finally knew what wheat was trading for in Chicago after 1848.
Yes. So, if this commodities market analogy holds, where is insurance going once standardization and transparency are established, Grace?
So, when we look at the commodities market, we see that the arc in financial markets has always actually been the same. First, you build a data standard, then you embed it into a system of record. And then you build a market terminal, which is the intelligence layer. And then from there, you can eventually build liquidity layers that form on top of that, traded products, indices, derivatives,
So, you're saying that right now we're in the early chapters of a much longer
a
story.
much, much longer story. I actually think we're essentially in the 1870s Chicago Mercantile Exchange moment for insurance. We built the standardization, we built the pricing structures, and now the question is what gets built on top of that foundation?
And if history is any guide, I think we know that the answer is a lot.
It is a lot,
Yeah,
Katie.
more transparency, more efficiency, fewer situations where someone is paying 4 times the market rate without knowing it, and ultimately a more intelligent, more measurable insurance market,
Which is better for everybody.
which is better for everyone. Grace, I love this one. I feel like we just took a history and finance lesson in under 20 minutes.
I mean, who doesn't love a good 1800s commodities deep dive?
Exactly. That's what I've been saying. I say that all the time.
We love it.
So, to sum it up for our listeners, what Advocate is building with the market terminal is the same foundational infrastructure that transformed commodities markets over a century ago. Standardization first, then transparency, then intelligence. And we are just getting started. So, once again, thank you, Grace, and thank you so much to everyone for listening. We are excited to bring you more data driven insights soon and to tell a little bit more of the Advocate story. This has been the
The Advocate
Advocate
Insurance
Insurance
Desk.
Desk.